Good day, ladies and gentlemen, and welcome to today's webcast entitled From Big Banks to the Underbanked, FinTech's Customer-Centric Model. Today's conversation is brought to you by commpro.biz and powered by Onstream Media. To submit a question or comment at any time during the webinar, please click on the Ask a Question button on the bottom of your screen. Simply type your message into the box and click the Submit button. Alternatively, you can submit your question via Twitter using the hashtag CXFinTech. Again, the hashtag is CXFinTech. All questions will be answered at the end of today's presentation. Also, a copy of today's presentation is available for your download. Please click on the Materials tab at the bottom of your screen to receive your copy. And at this time, it is my pleasure to turn the floor over to your host, Wendy Glavin, founder and CEO of the Wendy Glavin Agency. Wendy, the floor is yours.
Hi, Daniel. Thanks so much for having us. And hi, Jim. I'm looking forward to discussing from big banks to the underbanked, the FinTech's customer-centric model with you. So welcome to our audience. I'm just having a little, so at FinTech has been around for about 50 years, which most people don't even think about but use every day. So, Jim, what exactly is FinTech? Maybe you can define it for our audience.
Oh, boy. Hey, thanks for having me, first of all. And, FinTech means a lot of things to a lot of different people, right? Mostly it means what you need it to mean at a given situation, but kind of any technological innovation that impacts the financial services industry is what I would say. Now, I like to think about it as innovation that is generally targeted at increasing the velocity of money, right? And so for people who, funders, investors type of folks, they have money, they want to deploy it, they want to invest it, they want to earn return on that. They're chasing yield, right? On the consumer side of things, consumers, of capital, they use the money. They need access to it. They need better, faster, cheaper access to it, right? And so, on one hand, you have people who have a lot of dough and they want to deploy it, and on the other hand, you have folks who need to use it and put it to work. FinTech generally gets in the middle of that and makes that relationship more efficient, better, faster, cheaper. Does that work?
Yeah. And then I think a little bit later we'll be talking about the underbanked. So in 2016, FinTech was a disruptor to big banks. Banks were saying that, hey, we have to do something. They're taking over our lunch. They have an app. They have technology. What are we going to do? So there's been a lot of collaboration with a number of banks. So can you speak a little bit about more towards the end of 2016 where that bank collaboration was? And then we'll move into 2017 where FinTech is now considered a revolution.
Yeah, I think so. I would argue FinTech, it's always going to be a disruptor, right? Especially the big banks. And for the most part, big banks don't like to be disrupted, so that's not necessarily a good thing, right?
Right.
It's kind of like, here, try some new stuff, and we're like, why? We kind of like the way it's been done for a long time.
Right. Right.
And so, and again, it's not, they're that way, big banks are that way for a purpose, right? They make you and I feel secure to put our money there, right? You don't want to give your money to the fast guy, right? To the guy who's fly by night, right? You like the fact that banks don't change too much because they take care of your money, and that's a really important thing for all of us as consumers, right? We don't give our money to fly by night folks. So you have these, incredibly innovative guys in the fintech world, and you have these banks who are kind of, I wouldn't say resistant to change, but certainly skeptical that change needs to occur. Right, and so how did they get along? In 16, what you really saw was, I think, the realization that the fear that had been raised perhaps in 13, 14, and 15 about FinTech was going to be the new bank. There's going to be some FinTech company that popped up, and suddenly we weren't going to need any banks anymore. I think in 16 that fear started to go away. And everybody, both on the FinTech side as well as on the bank side, realized, hey, wait a minute, these FinTech guys, what they really do is they're just developing some new tools. They're almost kind of like a free R&D department for us, right? They come out, they got a bunch of venture money, they build something new. If consumers like it, it takes off. And that gives us an idea what we need to do as a big bank, right? And if consumers don't like it, they fall flat on their face, and we get to learn from that. Don't try that product, right?
So Citigroup has they have their own FinTech department, and then there's been other banks that have collaborated. Would it be? I'm trying to think of one of them. There was I don't know.
So Citi,
drawing a blank.
Citi has multiple departments that actually work on FinTech stuff, right? And Citi has Citi Ventures, which is a venture capital firm effectively with inside the bank that's funding FinTech type stuff, right? So does Santander. So do many of the big banks. Barclays, have kind of and that's really, it's interesting. You saw that come out really in the kind of 2012, 13, 14, 15 time frame when the banks were trying to figure out if, wait a minute, if there's a new thing that's going to be here and we're not going to be here anymore, we need to be part of it, right? And so it's good that happens, right? That's the banks showing their interest in, hey, there might be something out here. Showing, reducing their skepticism that somebody might show up with some technology to impact their business. And in reducing that skepticism, that opens up new opportunities for these FinTech companies, right? So that's a good thing.
Right.
Exciting thing. So then as we moved into 17, right?
Yep, I just wanted to add, so J.P. Morgan, they've teamed up with FinTechs, Wells Fargo, there's, obviously they know that they have, legacy, not those particular banks, but there's legacy systems, and, FinTech can automate and do things faster and quicker and with less cost and less regulations.
As a guy in FinTech, Wendy, I'm glad you're buying that message. Now, it's not always true, but I'm glad you're buying that. Marketing's working. It's good.
I do believe that.
No, and it is to a certain extent, but again, it's kind of like a test bed too, right? I mean, for the big banks, it's great to sit around and watch. I think the last FinTech chart I saw that somebody was trying to, categorize the FinTechs and all that, it's probably 3,000-4,000 kind of companies on it, right? It's great if you're a big bank that you can sit back and watch 3,000 or 4,000 ideas and see if any of them can make it, right? And then you can kind of pick and choose who to partner with, and which are the better guys to go work with, right? In times past, before there were these little FinTech guys running around, you kind of had to do that all in house, and that was just it's not that banks don't develop new products in house; they still do that, obviously, but at the same point in time. It's much more difficult for them to do that in a rapid fashion, and that's where kind of the efficiency comes into play. FinTechs can help banks be a lot more efficient, right? They can help them develop products, think of ideas, develop an idea, kill an idea, or make an idea successful a whole lot faster than you can with the internal bank product development process generally. So
right, so web and mobile savvy, consumers today, that's what they want. They want seamless access and customization. So I think I think events like Brexit and the U.S. election, have sort of shown us how fast-moving our global society is, and that the anti-establishment and rebellion is accelerating change. Consumer debt is at an all-time high. So I guess what I believe is that consumers, are different today, and they're not going to want to accept these, legacy systems and, waiting for their loans to be approved for, such a long time.
Well, and yeah, I do. And to a certain extent, if Apple continues to tell us we can do everything we need to do with our phone, and we believe it, which in general we do, right?
Right.
The next question is why can't I talk to my bank, or why can't I do my banking on my phone? And right, and so some bright guy, FinTech guy pops up and goes, hey, let's do banking on a phone, right? And there's several of those kind of FinTech companies out there today. But to your point, consumers are expecting, making their lives easier. I would tell you, I'm sure banks doing product research in 1979, right, felt the same way. They had to provide products and services for the consumer or for the business if it's a commercial side, right? And their target customer, whatever that may be. We need to understand what they need, where they're going, what they're doing. The society we live in is significantly more mobile today. The consumer has a significantly higher expectation. Of course, I'm talking primarily here about our wonderful United States. The rest of the world is not this way. And when we do get to talk about underserved and access to financial services a little bit later in the talk, we'll talk about areas that don't have all the needs that we have here in this country sometimes, right?
Right.
So
how FinTech helps business make better deals, I think we've pretty much just covered that. Do you have anything to add to that, Jim?
Well, I would say this. I would say if you're a business owner, right, think of this, right? If you're a business owner, you got QuickBooks today, you've probably got 6 FinTechs out there that you can go take an invoice out of QuickBooks and get cash within 48 hours for that invoice, right?
Right.
Which is critical to small businesses to grow.
Yeah.
They've got to have good working capital flow, right?
Right.
And so, but I would argue that 3-4 years ago you couldn't, right? And so now think about how you manage working capital as that small business. And by the way, those small business guys, they don't wake up every morning thinking finance. They wake up every morning thinking, I need to go sell more widgets, right? And so when they're out there trying to sell widgets, finance gets in the way, and it goes, boy, Joey just ordered 250 more widgets, but I only got cash to make 50. Now what do I do?
Right?
And so 3 years ago, he didn't have an answer for that. That business owner didn't have an answer to that. Today, he has an answer to that. I don't know yet that we understand the impact fully of FinTechs on these businesses just yet. I think we're going to have to watch this for a few years going forward. Back to our friends at the big banks, boy, they're loving this, right? And they're loving this because it's been so difficult for banks to serve the SMB marketplace in an efficient fashion. It's just, banks today, they really like the guy who needs $1 million or more, right?
Right.
It's cost effective, right? When you start trying to service the guy who needs $50,000 once a month, how do you make any money doing that? Or you give him a credit card or something like that, right? I mean, it's just really tough to do that. So banks love to see this. But as far as the impact on business, boy, we got to watch. I think it's going to be amazing.
So consumer-facing FinTech services seem to be, quickly gaining customers.
Yeah, it's critical, right? This goes back to the storyline we're given here today, which is if you don't understand what the consumer wants, you're selling something to a consumer, you're kind of stuck. And technology is advancing, and the consumer is buying into that technology. And certainly, the population population movement is in how do we solve the people for everybody under 50, and I'm 53, so I'm picking on myself and saying we don't matter so much anymore. But in certain areas we do, but in a lot of areas we don't. But the mass, the population, part of the consumer population that's going to be consuming the most stuff over the next 10 years is less than 50 years of age right now, right? And so how do we get those people who have been raised with all this cool technology, right, and expect all this cool technology and expect amazing interface and ease of use and all that kind of stuff? How do we advance the cause here? And so the question of why are consumer-facing FinTech services quickly gaining customers? Some of them are, some of them aren't. I would argue the ones that are generally serving a need the consumer has, right? It's an interesting thing, right? We don't always kind of even appreciate how that's happening, right? So I'll use the example of the Starbucks. Starbucks came out with a card, right? A loyalty card, essentially. Buy a bunch of Starbucks, you get a couple free. It was an interesting idea. It was a stored value card, so you actually gave them a credit card number or some form of deposit. They put it on the card, and then you could go buy coffee with it. Of course, that converted itself to an app, and today people would say, why are we talking about Starbucks in a FinTech conversation? Well, Starbucks currently has over $1 billion in stored value in Starbucks apps and cards out in the world today, right? $1 billion size of deposits. Think of it that way, right? $1 billion size of deposit makes Starbucks a fairly large bank. Consider
interesting.
That
an interesting point.
Yeah, consider that American Express has $3.3 billion of deposits, and then Starbucks has a third of that, right?
Yeah.
Nobody thinks of Starbucks that. But to the consumer, right, what's Starbucks to me? It's a place to buy coffee. I don't wake up in the morning and think Starbucks is a bank, right? although they probably clearly are if you look at the book. I get up in the morning, I think Starbucks is a place I go get a cup of coffee, and they've made it really easy for me to get a cup of coffee and pay for it. I can sit in my bed in the morning, I can order my coffee. By the time I drive to Starbucks, it's on the counter. I just walk in, I pick it up, I get in my car, I go on. That's easy, right? That's a consumer, FinTech company that's going to grow fast. You just made my life easier. You made something better, faster, cheaper for me, right?
Yeah. Also, I think. Just for me, like I go in, show my phone, I'm in and out, in a few seconds, and so that's the customer service is great because it's fast, it's quick, it's easy. It's too expensive, so they need to work on that.
That's right. Well, I would argue the other thing is we don't have to talk to anybody anymore, and I'm a technology guy, so I don't think that's a good thing. We need to talk to each other a lot more. Especially given Brexit and the presidential election, we need to talk to each other a lot more. But but it's interesting, and I think some consumer fintechs are growing fast, others aren't. But if you're the big bank again, drawing back to the big bank, you can watch this and you can see which ones are and which ones are. It would have been weird if J.P. Morgan came out with the J.P. Morgan Buy a Cup of Coffee app.
Right.
Who would have used that, right? I mean, but as soon as you pop one out with a Starbucks logo on it, everybody goes, well, that's what I want. I want Starbucks coffee. I think of Starbucks. I think that's the app I'm going to use to buy the coffee. Next thing you know, Starbucks has got a fintech, going on in the background nobody even knows about, right?
Yeah, I mean, do you agree that some of the biggest, at least what I think as a consumer would be PayPal, Venmo, as you said, Apple, Google, Amazon. To me, those are it makes my life easier. To your point about solving a problem. I mean, I can just do it from my phone or do it from the computer. It's funny, at the end of the NFL fantasy football season, I have 3 boys, and so, big football fans, everybody pays with Venmo or PayPal accounts. I mean, if you say that, can you pay with a check? People under 35 think you're a dinosaur. Like, what are you talking about, a check? Like, do checks even exist anymore?
Yeah. Yeah, we had that kind of same experience. I've got 4 sons, actually, and one Christmas, Mom got them all wallets. They didn't know what they needed those for. So what would I do with that? Everything I need is on my phone, right? I mean, it's cool and everything. Mom, thanks. I appreciate you reaching out for me there. But, here's the thing. I mean, you talk about Venmo and those kind of guys. Consider payments just in general. You want to talk about FinTech, and is it a revolution or is it an evolution? I think it's just an evolution, right? I mean, in 1980, it was cash or check, right?
Right.
In 1990, it was cash or check or a credit card, and credit cards had begun to become prevalent enough that enough people had them that it made sense for you as a retailer to have a credit card swipe machine, right? In 2000, cash became a pretty, began, and certainly was probably by then even a small piece of the transactions, primarily check and card. 2010 comes along, it's mostly card. The check people have pretty much decided checks are going away, and a majority of the check business already has. And it's funny, in 2010, even then, people are thinking, what do I even need the card for, right? Because, 2017 comes along, we all know we don't need the cards anymore, right? We all carry them in our wallet, but the reality is most of what our card does, you could do with the phone. And not that everybody uses Apple Pay for everything they do every day, but they could if they wanted to.
Right.
And there's Samsung Pay and 12 other kind of pays too that right off the phone. I don't have to have that plastic with me anymore.
So I think we're now getting into the startups and incumbents are targeting SMB, small businesses, small to medium businesses in the middle market sector. So can you?
Yeah, absolutely. I think that's another transition in 16. Kind of 15 and 16, there began to be a lot more interest in what the commercial side of the bank needed, right? Not just what the consumer side. Much had been done already on the consumer side, many ideas, and people kind of turned their focus, and innovators turned their focus to what can we do on the commercial side, which, by the way, commercial banking in general, commercial lending, commercial payments, you haven't seen a ton of innovation in any of that in years, right? I mean, most people in the industry, most people in working capital finance would tell you the way to get a working capital finance loan is the same way you got a working capital finance loan, in the 80s, and not too much difference in it, right? And so that appeared to be an area for innovators that was ripe for some automation, some efficiency stuff to be applied, some use of technology to be applied to get there. So I think that's opened up, some interesting things. You look at, and again, this gets one of those areas where you talk about new fintechs jumping up, and some good stuff happens, and some kind of scary stuff happens, right? And so early on, you had people like OnDeck and Cabbage and Can Capital and those kind of folks who came out targeting Fundbox, targeting, how do we get more working capital or more dollars down to the SMBs of the world. Those guys, in 16 started to run into some headwinds of kind of how big is this market and how many people will adopt it, right? But for the banks, again, the big banks looking at it, it's been a very interesting thing, and most of those mentioned companies have now done partnerships with the large banks as a way just to go do origination, go acquire more clients in the SMB space efficiently, right? So that's a great example of kind of like how, not only, do the fintechs come along and they're successful helps big banks, and their success helps actually drive more working capital and finance opportunity down to these small and mid-sized businesses.
And, back to customer service. So big data helps fintech access data. So, according to my research, artificial intelligence is, that's the insights into the data. So how does fintech work, with AI?
Yeah, so I think, this is again part of the evolution, right? I read a quote recently that EMC, the storage company, right? Data storage company says we're doubling the amount of electronically stored data, digitally stored data every 2 years. Think about that for a second. Doubling the amount every 2 years. All electronic data stored every 2 years, right? Somebody came along and said, that must mean we need something like big data, okay? Right after they came along and said we need something like big data, which helps you move the data, which helps you, correlate the data, which helps you process massive amounts of data. Somebody came along and said, okay, what the heck the data trying to tell us, right?
Right.
And so you heard a lot of people talk about big data and analytics, right? Math, primarily science to help us understand what all that data meant, right? So the cool thing is if, the innovative thing to me here is if people can start to use that analytics piece, that math on the big data to do AI, right? To come up with the ability to talk to Watson and say, hey, Watson, hey, Alexa, right? That makes our lives easier, right? Kind of makes our life creepy for some people, but it makes our lives easier, right? When we get answers, and that's great for consumers, but for business, it's even better, right? Because decisions that used to be made and took hours and months and years to get made can now be made on much better information, on much more information, knowing much more than you knew before in a much more rapid fashion. And I think that's where AI is going, especially on the commercial side as it relates to financial institutions.
Yeah, IBM Watson's a great example. I'm going to move into now blockchain because they're very forward-thinking and forward-moving in terms of this. There's a lot of videos that they put out, IBM, about blockchain, exactly how it works and how it came into play. And, they're really, I think, based on the fact that I'm not a tech person, it's at least for me, made it really easy to understand. Right.
Yeah, and here's one thing. It's I looked up this definition of, I knew you were going to talk to me today about blockchain because everybody who's talked to me about FinTech in the past 18 months has talked to me about blockchain. But here's a definition straight out of Wiki, right? Blockchains are secure by design, an example of distributed computing system with a high Byzantine fault tolerance, decentralized consensus, can therefore be achieved with blockchain. This makes blockchain suitable. It goes on to say, this offers the potential of mass disintermediation and vast repercussions of how global trade is conducted. Okay, here's my first thing, right, about blockchain. It's a great word. I get buzzwords. I've been a technology guy for 30 years. I get buzz, right? What the heck did that do for me? Nada. I need to see applications with this stuff, right? I need to see somebody come up and say, you know what, that Starbucks app that you can buy coffee with, it uses blockchain and that makes your life better. Then I'm going to go, okay, cool, let's do some blockchain stuff. But right now, I'm kind of like a lot of people walking around talking about this. And I'm a geek. I actually do understand at its core level why it's good and how it works. I'm still thinking about the big bank, and I'm still thinking about the consumer, and I'm still thinking about the mid-market and small business, and I'm thinking to myself, I don't know that this is anything that's going to impact their lives.
Okay, so let me ask you a question, because I was actually doing research on blockchain, and I'm going to give IBM I used to work there also, but
shout out,
they make the videos are fantastic about how they explain blockchain. So basically, so it's an open to add to what you just said, open distributed ledger that can record transactions between two parties efficiently in a verifiable and permanent way. So, I mean, it's you can feel more secure against hacking, and you don't have to go through all the intermediaries. So it makes things faster, easier. You don't have to go through lawyers and accounting and the government sectors. So you don't see that as making a huge impact?
No, I don't. And here's why: because I don't believe much of that. And I'm not just trying to be hard, but here's the thing, right? You can't. Okay, so let's just talk about one use, and it's the known use. All right, Bitcoin. Okay, 5 years ago, 6 years ago, I must have had 12 guys call me up and say we got to do something with Bitcoin. It's cool. It's got an application in the world. I think it's a great way. It's a much more efficient way to move money, certainly more efficient to move money internationally. I mean, move value, let's put it that way, because it's not really money, internationally. But still, when does Jim really care about that? And all the things you just described are possible with the technology, right? But now let's talk about the institution.
Okay, can I...
Yeah,
Sorry.
Go ahead. I mean, do you really want to know a transaction didn't flow through one of those nice, safe, secure institutions?
Okay, so maybe you don't care, right? But your wife might care about the diamond industry. Because if you go from, mine to the consumer, all of that was, so incredibly complicated. And so now that, that, as I was just explaining, it had to go through so many different intermediaries, and then, does your wife know that the diamond ring you give her, it's really, really a great diamond? So I think that's an example, a very good example of blockchain helping, the transfer of goods more efficiently.
But you can't disintermediate in that picture, though, the guy who values the diamond, right? Because I can't, and my wife can't. I mean, she can. She can tell me
I agree
a lot
with
about
that,
what she thinks it's worth, right? But so my point is it will disintermediate some. I don't think it will disintermediate as much as are implied sometimes by the blockchain enthusiasts. And I think just look at the example. Like I said, look at Bitcoin, see who got disintermediated and who didn't. I think many of the folks are still in that supply chain that were in that supply chain when it was an account number and a wire transfer. But it's still better. It's better, and it's getting better. But my point is it's not a technology that we won't have in the future. We'll have a lot of it, and it will grow. My point is today, rather than talk about blockchain, let's go develop some applications that are like the Starbucks app. I want to go buy coffee with it. I want to do something with it. I want practical application in my life. This is the thing, technology people, we're terrible at this. We get all excited about our technology and cool stuff and amazing stuff, and wow, it really does this. And a consumer just walks in the door, and my wife is one of these. She's been married to me for 24 years now. She walks in the door all the time. She says, I don't get it. Why would I want to do that? And you're just like, well, wait a minute. It's the greatest technology ever. I mean, it's awesome. It's incredible. You got to have 5. She's like, I don't know why I ever want to do that. It's really
okay. So then that's something that marketing can handle and public relations.
Exactly.
I think we're going to conduct a poll. So let's begin with this question. What area of FinTech is of most interest to you? So we'll give you, about 20 seconds to answer that question, and then let's take a look at the results. Okay, so interesting. And Jim, I think it's good that you're so pro-banking because we have here, 43% of our audience is interested in banking and financial services. 14% are interested in technology, AI, and blockchain. So that, again, goes to your point. Here it goes to some of my points. 29% are interested in consumer solutions. 14% are interested in payments. So, yes, we have a lot of people in the audience who are quite happy about the fact that you're so pro-banks as a FinTech company.
Well, I think it's been great to see how the big banks have kind of opened up. I've been selling technology to banks since the late 80s. And what I will tell you is they have never been more attentive to hear what you have to say than now, which is important, right? It means they're listening. They're not they're open to the idea that there might be a better way to do what they're doing today, right? And that cuts across FinTech, that cuts across RegTech, that cuts across everything from investment management to payments to insurtech, all that kind of stuff, right?
Real
Everybody
estate,
is kind of opened up. That's right. And so that is, that will make a better experience long term for the clients of that bank. And so it's good. It's good that they're here joining us today, and we should, I know it's easy to pick on the big banks. Everybody loves to do it, and especially those FinTech guys. But the reality is this is a partnership that is symbiotic. We need each other to make this work right? Again, they get free research and development out of us, and they should enjoy the heck out of that and take advantage of it. And for us, most of us in FinTech today, they will become either our biggest customers or our biggest allies in deploying what we're trying to do.
Right. So how's FinTech is catering to a globally mobile workforce in retail banking, foreign exchange, and investments. So can you speak a little bit more about that?
Yeah, sure. I think, again, I mentioned earlier, the mobile workforce, it gives mobility in general. We're going everywhere.
Right.
If you travel internationally, right, you really wish you could just take your you leave the credit cards at home, you take your phone, right? You really wish your phone network works wherever you go. You really wish your payments, whatever you're using to do payments, work wherever you go, It's been years, Visa and MasterCard and Amex been telling us accept it everywhere, right? This technology that we're getting accustomed to and using here in the States, now we're gonna take that everywhere we go. And if we can take it everywhere we go, and when we can take it everywhere we go, that will make us more mobile. That means we can go more places easy, right? Better, faster, cheaper. You don't have to go to the currency exchange guy, right? I mean, you got your phone, you're good. Why should I go to the currency exchange guy, right? Interesting stuff. I mean,
also there's what I think is really great is and I am a big FinTech fan that remote workforce. So I've done work in Scotland while being in New York City because of FinTech, because of the applications that I've been able to use to have weekly meetings and be able to work with European companies when I'm in New York City just in my office.
Right. No, and again, where FinTech fits in great to solve the global problem, the mobile problem, right? I think about trade, right? And think about those SMBs we were talking about, or even mid-market guys we're talking about. How difficult it was for them to try to sell something to someone in the UK. Right? Have you ever been on Amazon and actually not willingly, not even knowingly bought something from a supplier in the UK? I've done it a couple of times. You don't even realize it's happening, and then all of a sudden it's done, right? That technology, payments technology, supply chain technology, logistics technology, all that's in place now to make this work. I can be a little guy in a garage in Ohio making interesting things and selling them across the world. The more that FinTech can come in and help us move the payments, move the goods, do all those kind of things that are necessary to facilitate that transaction, the better the better the overall stronger the overall economy is going to be. Right?
Yeah. The previous client I worked for, he actually did that. He created a mobile app in his garage when he was a kid, and
right.
That was in Scotland, and then he's it's been growing throughout the world, and he's in Scotland and continuing to make improvements, and it's definitely a global company now.
Right. And
so let's get into
part of your question. Let me follow up on one point really quick. Part of your question was retail banking. It's interesting.
Right.
I don't know if you read this the other day, but now that we're thinking about making retail bank locations coffee shops. See, we learned from Starbucks that Starbucks can be an FI. Well, then banks can be a coffee store. I think that's great.
Now, and also, what about for college students? I mean, I know we're going to talk about millennials later, but which is a huge demographic sector. I hate to call them millennials because they fall into so many different categories. But there's also what FinTech is doing in terms of around colleges and universities.
I think the whole thing around just, children or dependents in general, right? I mean, there's some very interesting fintechs that have come out recently, and this has been a big retail bank challenge for years. How does Dad give Joey, $50 to go with his friends, either off to college or go with his friends down to the baseball game or over to the movies, right? When I was a kid, Dad pulled out his wallet and he gave me $5.
Right.
He didn't give me $50. We never had $50, right? But
right.
he gave me $5, right? But now, Joey's got a phone. Joey's one of the kids that didn't want the wallet for Christmas, remember? And so how this whole allocation of kind of managing your children's finances and at the same time giving them financial education, which is so critical to your children, absolutely, critical element that they learn spending, saving, how payments work. The cost of money. If I use a payment, does it cost me money? If I use one payment mechanism versus another, how much does it cost me to do that? Right. So I think it's very interesting to look at that whole segment, and as I said, I think last time I checked, there's about 13 fintechs that were out there trying to solve the mom or dad wants to give child some money, she wants to do it in a secure way, doesn't want to let everybody on the street know the child's walking around with $100 bills or $50 bills in his back pocket, right? So makes it safe and secure for the child, makes it kind of fraud-proof. I mean, there's all kinds of really interesting kind of things that come up there. And then a lot of these companies, which is, to me, the most interesting thing, are actually trying to teach the child financial literacy within the application itself. The consequences of spending too much money or the consequences of spending too much money on one product versus another, right?
Yeah,
so
I guess I have a different issue because my boys are older, 25, 23, 18, so it's more like, okay, Mom, can I have some money? And actually when I was giving the example of the NFL fantasy football season,
right.
So my boys, they were in it with their dad, and their dad didn't have a Venmo account. And so, he's actually the example of who wanted to send a check. And, our sons were like, Dad, what are you, crazy? Like, you don't have a Venmo account? You're so out of it.
Yeah, you're so old. You're so old, Dad. Come on. Get with the program.
Exactly. Okay, so let's get into who are the underbanked. I think that's a really core issue. That's the title of our webinar. So can you please explain who the underbanked are and how FinTech is helping the underbanked? Yeah,
I think, for me at least, the way to think about the underbanked is folks that the banks couldn't get to for one reason or another, right? And I mean, banks are, again, I know we're challenged by them sometimes, but for the most part, banks are very efficient at helping loans be made available, helping savings and credit cards be available. All those kind of things are available. But then you got this whole set of the population just couldn't get there, right? And couldn't get there because the bank really didn't have a product for them, due to risk, due to other factors. And so underbank, people started talking about underbank. This has been discussion points since the late 90s. I think the term underbanked came alive probably 97, 98. People started talking about, what about those people who don't have access to financial services, right? And primarily, as everyone was, right at that time, as I mentioned in that timeline earlier, everything's moving to credit cards. If you don't have a credit card, how do you pay?
Right?
And a credit card is credit, right? And not everybody really has the financial wherewithal to afford credit, right? And so how is that going to work exactly, right? And so the study of the underbanked became, a very interesting thing for the financial services industry. And, of course, because innovators are innovators, they said, hey, look, the financial services industry thinks that's a cool area. We need to go jump in there and start figuring out if we can develop some cool stuff, right? Develop some innovation. And so now there are quite a few folks who are out there. I would say probably 100 at least in this country. And I would say if you jump the pond and go to Europe or go to Southeast Asia, you're going to find substantially more, probably in the thousands in total. Folks trying to solve that problem. I don't have necessarily financial wherewithal for credit. Therefore, I can't get a credit card, but I do need a way to pay. I do need a way to become financially literate. I do need a way to start establishing a financial track record so that in the future I can become creditworthy, right? Or at least I can become financially stable and have the appearance of that to banks and institutions I might need to work with, right? So this area, a lot of growth going on here. I had a friend walked up to me from New York one day, and he and I were having this long discussion, going back and forth through email about the underbanked. And he said, most of the stuff you're thinking about, Jim, is great and fine for those who here in the North American area don't have access to capital. But what about Africa?
Right.
What about Southeast Asia, right?
Right.
Because I was always coming up with, here's another cool phone app to solve that problem. And he was like, okay, but they don't have phones. And now what do you do, man?
Right.
And some of them, there might be one guy in the has a phone. Yeah. It's interesting though, because I think the funny part that happens sometimes is when you think that you don't have a phone, but the functionality can happen anyway, the innovation can happen anyway. Then that knowledge starts to come back to this country. Then you go, well, wow, I don't even need my phone to do that anymore, right?
Right.
Because there's guys, some guy developed technology to allow a guy who didn't have a phone to be able to do that, and well, now you can use that, right? So developing for segments like the underbank is a specialty, I think, of FinTech, and I think it's something that, again, if it's that research and development department for those big banks. To go out there and try to test some things and try to use the efficiency of technology to make it a little better place.
Okay, so one example of the underbanked is the next slide, millennials. As you see, 73% of millennials would rather learn about financial offerings from Amazon, Google, Apple, or PayPal and distrust banks. That's a huge...
and I think a bunch of them use a Starbucks card and don't even realize it's a financial offering, right? And
right.
that's my point, though. I mean, that's the way it's supposed to be. They're right. We're not, right? It might be that we're not supposed to know it's a financial offering. We're just supposed to use the utility of it.
Right.
Again, we go back to long form applications of my youth, right? You don't use long form applications anymore in pretty much anything, and so. Any financially related thing, right? I mean, it might be an online app that you have to fill out, but again, it's just becoming a whole lot easier due to innovation to interact with these things, and the less you have to interact with the form of, right, the form of the loan offer, the form of the checking account form, or whatever, the less you have to the less you think that you need to do it at all. And the less you think you need to do it at all, the more you ask yourself the question, well, what am I really trying to do here today? What I'm really trying to do here today is get in that Hyundai and drive home.
Right.
What has this form got to do with me getting in that Hyundai and driving home? Well, unless you fill out the form, you can't get in that Hyundai and drive home, right?
Right.
This is the connection that that millennials rather have figured out. They're kind of like, and this is Amazon, Google, Apple. They've taught them that. They say, no. With us, all you do is you get in the car and you drive home.
Right.
You don't have to worry about the long form app, right? Now, you might have to sign the terms and conditions, but and they're long and ugly. And I want to find a millennial, just one millennial who's ever read any terms and conditions, because none of my kids do.
That's funny.
Click the button, move on, right? So, go ahead.
something that I read. I love Harvard Business Review, and the September 2016 issue. The whole issue talks about what is it that your customers really want. Going back to your original point. So They define 30 elements of value that meet 4 kinds of needs: functional, emotional, life-changing, and social impact, and that when optimally combined, increase customer loyalty and revenue growth. So I believe that FinTech is the perfect, customer-centric model because it provides functional value, emotional, life-changing, and social impact. Do you agree with that?
Yeah, no. I think it's right. Here's, I think it would take a guy from Harvard Business School, and I apologize to anybody who's on the phone related to the Harvard Business School, but I think it would take to come up with a statement like that. There's just got to be something in it for me. Right? As a consumer, I just got to say yes. I don't know if there's really a study of what it is that I say yes about, or even if it's necessary. It's just I need coffee. I want a coffee cup this morning. I want a cup of coffee this morning. If you make it easy, forget my. I go to a Starbucks right across the street. There's a Dunkin' Donuts. Dunkin' Donuts has got an app too. If you ever, I'm probably going to make Dunkin' Donuts people mad, right? If you ever look and try to use that app, oh my Lord, it's a headache, right? And the Dunkin' Donuts has actually got an easier, faster drive-through to go through for me, right? I will go to the Starbucks one every time. I'm not a coffee, snob. It's not about the coffee. It's just about any coffee for me. And so why don't I go to Dunkin'? Because it's just harder. It's really, and I got to drive across traffic to get to the Starbucks, and even with that, it's still harder, right? So just give me something functional, and this is what it comes down to for consumers: basic needs, right? It's basic. Fill my basic needs, right?
But that's what the Harvard Business Review talks about. It talks about how, in order to really, make an impact with a product or service, you have to be offering one of these things. So, in terms of FinTech, I'm saying the core value of the company, it either has to provide, all of these, any of these, or one of these, in order to, be competitive, especially today. So, when you're talking about Starbucks, so, that's the underlying value of that is, it's emotional, like you enjoy it, I enjoy it, we go in quickly, we get it, we get out. I don't know that it's life-changing. Functionally, it's easier. That's what we just spoke about. So, that would be some core values that they're providing that, impacts the customer, which is that's the whole point. And if you go through all different industry sectors, there's underlying values, and it's hard to pin down what customers or consumers want, but there's always an underlying psychological underpinning. So it's sort of what you're saying, like, hey, I want to get excited about it, or I want to, I want it to help me save money, or I need to, work more quickly. Like, what can I use that, I know whenever I call Apple Care, they'll fix my problem, all the time, every time. So it's like, no problem. Once I get on the phone with Microsoft, forget it. Sorry if there's any Microsoft listeners. I'm only talking about, online, phone service. So
I would say, one of my favorite examples here is our kids were younger when the first web kind of grocer came out, right? You could get online, you could order all your groceries, and they actually would deliver it to your door, right? And my wife loved it because we had babies and small kids at home. The last thing she wanted to do was load all those buggers up and go to the grocery store, right? It wasn't like she didn't have a full-time job already, right? So and they died. That company died. It went away. Couldn't make the financial model work. Again, I would argue that was as much of a FinTech company as anything. Yes, it was an online grocer, but it was all about moving the goods and making dough. And payment was easy, right? Payment was right there. That was probably 1990. 97, 98, 99, somewhere in that time frame, if I'm right. Maybe might have been as late as 2000. Can't remember exactly, but somewhere in that time frame. Nonetheless, 2 weeks ago, I noticed my wife on her phone ordering groceries, right? And she hadn't done it between those periods of time, because when the thing went out of business, she just figured, forget it. There's not another one that's going to do it. Really hasn't been one. That whole period of time goes by, no one else coming along with that concept met a better objective for her. It made her feel good enough to move towards it, right? Now, her grocer, and I'm staying away from brands in this discussion, but her grocer now has the ability to go online. They don't deliver it for you. You got to go pick it up, right? You go to the store, you pick it up, but it's there. It's in a bag. It's in a grocery cart. A nice guy wheels it out for you, puts it in his car. This is this is great. In addition to that, because she's at the store, if she forgot to put 3 things on the list, she can just walk in, grab those 3 things and put it on. Form of is way better today than Form of was in 1997 for her. And so now she's willing to take the experience again, right? Now she's willing to walk down that road and give it a try. I can tell you, after 2-3 weeks, she's loving it. And she will tell you why it's so much better than the original version that came out, right? This is how innovation works, right? Make it work better. That's what I always say, right? Make it work a little bit, and make it work better.
Right.
I think this study and this talk around Harvard, it's getting to the point of you just got to get the consumer excited about it and into it. Going to the discussion prior, millennials, what excites them? I remember everybody 3-4 years ago was talking about you got to gamify it. You got to make it a game, right?
Right.
That whole idea of gamification brought user interface and the study of user interface forward in an extremely rapid fashion, right? So
Netflix.
Again, yeah, Netflix. There you go, right? I think it's and remember Netflix when they came out and they used to put the CDs in your mailbox, right? That's what Netflix was when it first started. Make it work better, right?
And now if you can't watch a movie on TV, I'll go to tell my kids, I wanted to see this movie that's 20 years old. I feel like watching a movie about John Cusack. It's like, well, Mom, go on YouTube, go on Netflix, go on they have a million different go on Hulu, go on it's just they don't even think about they wouldn't even give that any thought. They probably wouldn't even start by turning on the TV. Let's move into how's FinTech dealing with U.S. regulation barriers due to security concerns.
Right. I think this is where, again, I'm going to give a shout-out to my big bank friends. This is where they help, right? Big banks been dealing with security issues forever, and the guys who service big banks been dealing with security issues forever. They know fraud. They know syndicates. They know stuff, right? These FinTech guys don't. Right? I mean, you can be a brilliant guy, you can know everything, but you don't know that. You can't, fraud is a thing, you experience it, and the more you experience, the more you know how to combat it. It's not something you're born with. You're not born with a natural trait that taught you how to prevent fraud, right? So
look at what happened to Yahoo.
Yeah, and that list is really, really long. I mean, there's a tremendously long list of fintechs that jumped up and said, "I can do this," and then found out, "Oh, darn!" And the big banks standing at the at the coffee line, chuckling about, "Hey, we had that one back in 1992. Remember when we solved that problem, right?" So this is where Symbiotic can help each other here, and those banks, of course, are regulated by federal government, state government. And those governments, in general, are there, with the intent to protect and help, right? Some would argue over the last 8-10 years there's been a little bit of overbearance there. I know, Jamie Dimon has kind of spoke up and said, give us a break. I know a lot of the small community banks are streaming for some relief, right? I read an article the other day. They're all complaining. They're saying, look, we're not systemically, what's that word? Systemically important, right? We don't matter to the whole banking system, so it's okay. Can we get out of some of this regulation because it's killing us?
And there's so much compliance. I mean, Goldman Sachs is. I mean, I don't know. I don't remember what the count was. So we're sort of getting close to, or we can go over, over time. But let me move on a little bit more quickly.
Sure.
So I wanted to bring up this quote. I think it's really strong, and I'll give a shout-out to GE because I work there. Jack Welch said there are only 2 true competitive advantages, the ability to learn about our customers faster than the competition, and the ability to turn that learning into action faster than the competition. So I think that's what you keep talking about, Jim. Like, okay, how can we turn that into action? How can we turn that into something functional for the customer?
Yeah, and this is something the technology industry has learned over the years, right? If what you're doing is waiting for your patent to be approved, there's already 4 guys who have run past you, okay? And it's not that patents aren't relevant and you shouldn't have them and they add asset value to the company and all kinds of great stuff like that. However, right, the pace of technological change is so fast these days that Mr. Walsh, who probably said this 20 years ago, I think,
right, exactly.
Truly a visionary when he says that, right? Because really that is what you have. We like to say, in our business, we've got a 12 to 18-month competitive advantage over folks. Anything, if we act like we have more than that, we're just delusional. We're convincing ourselves of things that aren't true. There is so much available in technology. There's so many tools, databases, everything. People say, "Oh, it's all the open source." Got nothing to do with the open source. If I look at your interface and I see what it's doing, I can replicate that in, no more than a month. Right?
Right.
It's just that easy anymore. And so, your ability to build something, protect it, and hide it from everybody else, not really there. Especially in FinTech, right? I mean, in science, in technology that's advanced towards biology, medicine, those kind of things. Yes, it's still doable patent. But in FinTech, you're trying to make a better experience for a retail banker. Good luck trying to get a patent on anything like that. Or just don't even worry about it. Just go build a better one and run fast. That's what you got to do to stay alive in this world. And I think that's exactly what Mr. Walsh is saying here.
Okay, you know what? We're going to do another poll. So we'd like to know, what do you see the biggest opportunity for FinTech in 2017? So we'll give the audience about 20 seconds, and then we'll review the results.
Yeah, Wendy, I still want to do the poll on the Falcons or the Patriots. Are we going to have time to get that one? That would be too controversial, I know, right?
Oh, yeah. Okay, so here's the what they see as the biggest opportunity, what our audience sees. So interesting. 50% see meeting customer expectations as the biggest opportunity, and 50% see retail compliance and branding.
Right.
So I certainly am 100% in agreement with the customer experience.
Yes. And I think the retail compliance and branding, that goes along with the customer expectations, right? Because I mean, it's Starbucks is coffee, but so is Dunkin', and that brand had something to do with it, right? So retail compliance and branding, without the compliance, you're not going to make it. But the branding, I think, is important too. Especially you look at the millennials, you look at the younger generation. Anybody less than, as I said, 50 earlier. Brand, you get a brand. YouTube, Google. These are brands that say things to that generation that just, I don't know. Tide detergent when I was a kid growing up had a brand like that, right? Coca-Cola had a brand like that, right? But I mean, these, how many years will it be in the future before people stop saying Google it?
Right.
Right. I think it'll be a long time.
So I think we'll just do one more poll question. So we'll take a moment. Please provide one of your goals for 2017, and we'll give you 20 seconds, and then we'll preview the results. Okay, interesting. Bank and FinTech collaboration, 50%. Creating or growing a FinTech startup, 50%. So that's those are great goals, and ones I know that Jim and I both certainly agree with. I'd like to say that I think something that's important coming from my end is that communications, marketing, and public relations, must keep up with FinTech trends to improve businesses and gain a competitive edge. When Jim spoke earlier, about, it's nice to hear, Wendy, that you're excited about this, but, a lot of people aren't. Well, I think that that's the job of, marketers to be really up to speed and, understand and learn, because it's affecting everything that we do. Before I close, Jim, do you have any questions?
Did we get any questions while we were doing this? Let's check the Q&A box there really quick. Here's a question. What resources do you recommend we read to stay current with the latest FinTech trends in both B2B and B2C worlds? I think the web is a great source, and I think, any of the thing about FinTech, especially the consumer-facing FinTech, it's going to be in the press and out and talking about it well before it's probably an app on your phone. Just kind of the way it works these days with early stage fintech companies. On the B2B side, right, it's really interesting to see how B2B fintech companies are marketing themselves. It's not like a traditional commercial bank or commercial payments processor would market themselves. And so they are doing much more of the content kind of management strategies. And so things like this webinar, and on the B2B side, I would pay attention to things like webinars. I would pay attention to video training. Boy, there's a ton of stuff on YouTube that's coming that these companies, these B2B fintech companies, are putting out from a publishing perspective, and where you can find out more about them and what value they add and what value they bring. The thing about these fintech companies is they speak, in this younger generation of marketing, right? And so, a lot of the time they're not going to put out a publication. They're going to go do a video and post it on YouTube and say, "Hey, everybody, come check out my YouTube on Twitter," right? And so a lot of where you can find, I think, the B2B stuff, especially the early stage fintech B2B stuff, is now out there in primarily video and media on the web.
I would definitely add to that by saying, since I met you, Jim, last December, I read all the time, and it's so easy. You can just put in whatever sentence you want. Like, what are the 2017 trends, for FinTech? And then, all the publications like FinExtra and,
right.
IBM, and I mean, it's endless. And, there's a lot of free downloads, both for B2B and B2C. I certainly can provide, a very lengthy list of, reading materials, because that's, what I've spent, over the last year doing. That's how I learned, and I'm not a tech person. So it's actually very easy to be self-taught, to become, to teach yourself. So
right.
I think we're going to, we're soon closing, other than, Jim, if you have any other questions for me.
No, I appreciate your time, and I appreciate you inviting me here today to help. I hope we gave some good feedback, some good answers, some good knowledge to folks out there. And if you need to reach me, I'm on Twitter at XJAE or at TradeRocket, or you can reach me at TradeRocket.net.
And I want to say, thank you to Onstream, thank you to Faye Shapiro at commpro.biz for hosting this event and running this event. And, I'm excited and, so thrilled that we got to share our conversation. It's always fun, talking with you. I told you when I first met you, Jim, when we spoke for an hour and a half, I said, "Oh my God, Jim, you can talk as if you're speaking to an investment banker or if you're speaking to a 16-year-old. When I first met you, I didn't know anything about FinTech. And in that hour and a half conversation, you got me so excited and passionate about it. I called my ex, who's been on Wall Street for 30 years, and I was like, "Hey, I think we better do some investing in FinTech." So,
Well, I appreciate all that, Wendy. I appreciate that feedback. Let's hope we had a similar impact on some of the folks on the call today. That'd be great.
Yeah, no, I thank our audience for joining us. And we went a little bit over time, but there were a lot of things to cover. And please feel free to if you want to shoot questions to me about what to read, I can send you a whole big reading list. And on my website, you can see the different work I've done and how I've gotten up to speed. I have some articles I've written on LinkedIn, posts about actually an article on equities.com, and that as someone older even than Jim, how I've been able to stay really ahead of the curve and be up to speed with digital marketing, MarkTech, all those kinds of things. So it's learning and teaching yourself. It's very empowering. And actually, Jim, I think it keeps me young.
Amen to that. I totally agree.
Thanks so much, everybody.
Thank you all very much. I'll have a great afternoon.
Thank you.
Bye-bye.
Thank you. This does conclude today's webcast. We thank you for your participation. You may disconnect your lines at this time, and have a great day.